currently, India has a trade, basically tariff of 10%.
Okay.
And what the trade discussions with the US is to be at 18%, which India had agreed early on before the Supreme Court ruling. And so the question really is how do you justify from 10 to 18%? And then you have what you call as 301 finding coming in. It gives a lot of leverage to the president to take it up like he's done with the Chinese. So I think India has to walk a very, very fine line, trying to balance expectations back home and then trying to deal with the Trump administration.
Right. So do you think there's going to be a rephrasing and redrafting of the agreement in line with what you're saying? The 301 investigations are currently on, and that could give President the leverage.
Well, I would say that, as my understanding is, if India signs a trade deal by end of May, it's 18%. And if it is not signed for whatever reason, then it gives the option to the president after 301 to take it in any direction.
Right. So 301 investigations, I think the USTR is going to have that hearing on May 8th is what we're given to understand from communication by the USTR. But, one would actually assume that in the midst of this crisis due to the West Asia war, US has deployed its energies in that area, and then you had the tariff disruptions last year, which are roiling the global economy, including that for the United States as well. So one was assuming, or one was expecting, that the US would be in a position to sort of adjust, because they also want to get deals done, right, after the Supreme Court invalidated IEEPA tariffs.
Well, sometimes what we see is logical and practical does not go that well in this town.
Okay.
And you have to understand the turmoil in the state of Hormuz is having an impact here with the consumer, having impact with the farmers, and it is impacting the president's approval rating, which is in the mid-30s at the moment. And so from that perspective, a 18% tariff, a deal signing with India will be a success story.
Okay.
And so I think President is looking for that as part of celebration to say, listen, I am closing deals. So I think from that perspective, US is looking at a success rather than just another disruption.
Right. So what is the effective tariff rate that you think the administration will come to terms with, will accept?
Well, at the moment it's 18%,
yes.
And hopefully they come to understanding. I think what we have to look at is it's not just broad 18%. We need to look at where can we get the exceptions going. Mm-hmm. So this way a lot of exports from India are not penalized. It's a classic case of Brazil today. Okay. Brazil has a higher tariff rate, but 90% of its exports are not, they're exception. So they are willing to give a higher tariff because it impacts only 10%. Okay. So I think India has to look at from that strategy, what can we push on exception?
Right, and what do you think that could be?
Well, definitely you have the basically pharma products coming out. You have electronic goods coming out. It could be also on the defense side. It could be also on the AI side. So I think it's just a matter of basically packaging it and driving it.
Right. So by May is essentially when you're suggesting that some sort of an agreement could be reached at. But when do you think the signing of the deal could happen?
I think the signing of deal, the administration may say, listen, we want to do it principle to principle, and that could be whenever the Prime Minister comes to Anga Week in September, right. They may target that if the Indian government is willing to do that. Or it could be on sideline of G20, which is happening in December in Mar-a-Lago. So it's just a matter of what both sides agree upon and then sign the deal.
Absolutely. So, Mr. Aghi, we are here at the Select USA Summit, and we have seen at least 12 companies make investments in the United States to the tune of over $1 billion, and that was something that was announced by the U.S. administration just a short while back. While we have also seen investments from Sun Pharma as well, in terms of the partnership that they have done. But Is this the right time for Indian companies to sort of be coming and investing here? What is the leverage? What is the edge that Indian companies get by investing in America in the times that we're living in?
Market access. Basically, when you're investing here, you're basically avoiding the tariff, and you're able to make in the U.S. to the government, to municipality, to state level. So you have a much broader market access. You have to understand, you look at the Birla Group is setting up an aluminum plant in Alabama. You have the SR Group setting up steel plant in Minnesota. You have Welcome Group setting up a towel manufacturing in Midwest. I think they're all looking for market access. And because there are tariffs, they're trying to circumvent those tariffs and come to U.S.
Okay, but when you speak about having market access, India itself is a huge domestic market.
No, absolutely. I would say Indian market is growing, but I think the return, India is also, you have to understand, a very price sensitive market. Whereas they are able to get better margins here. And also I think from a de-risking of a business strategy, you just don't want to hedge all your bets in single market. So US becomes a secondary market.
Okay. Just one final question, and this is essentially about the big challenge that you feel and you think that companies, when they talk to you, they are facing. Of course, we've seen economic disruptions on account of the West Asia war, some tariff disruption as well since last year. But even defying that, companies are making those investments. So what are some of the challenges that companies tell you they're facing? And how has that been communicated to the administration? And how's the administration then looking at that?
So you're saying US companies in India or?
Indian companies in the US.
So what we are seeing is not an issue of ease of doing business. That's what the US companies are facing in India. What we're looking at is Indian companies coming to the US is basically looking at financing, a cheaper financing for the big investment. And I think that's available. It's available either through state level grants itself, or it's available through Exim Bank or DFC or normal private channels. So we don't see much issues coming out of Indian companies when they're investing in the US itself. But we are seeing that the slowdown from the US into India is not there from a corporate world perspective. We're seeing US companies investing more and more, especially in the global capability centers, and they're leveraging that. And I think they're finding a lot of positive outcomes on the R&D side, on the innovation side itself. And so that's not slowing down. In fact, 60% of the global capability centers in India are US companies now.